earlier this month, we heard Finance Minister Pravin Gordhan calling for an end to excessive executive pay packages, including those at South Africa's cash-strapped parastatals. And with that, we are starting to see a small but growing number of South African-listed companies moderate their short-term incentive schemes. Mark Bussin, Chairperson of 21st Century Pay Solutions Group, joins me now to take a closer look at some of the shifts that are taking place and just how much further we have to go. Thanks so much, Mark, for joining us this afternoon.
Thank you for having me.
Well, where we've got altruistic concerns on the one hand versus global economic slowdown hitting business on the other here in South Africa, is executive pay fever calming down?
We hope so. With the launch of King 3, there have been very stringent governance procedures put in place. Organizations are trying really hard to accommodate the King 3 recommendations. The remuneration committees are under a lot of pressure. Stakeholder and shareholder activism has increased. So I firmly believe that executive pay is under the spotlight and something is going to be done about it.
Well, while that may be happening, I mean, the bonus culture in South African banking still seems to be alive and well. This is the issue that's being raised at Standard Bank's AGM this morning. Tom Boardman of Nedbank's pay package, another example that could exceed 40 million rand by 2012. I mean, the question though is to what extent these earnings need to be placed in a context where, for example, Tom Boardman had to lead the bank out of one of the deepest holes in South Africa when he took over the bank in 2003. So
Yes.
do we have to place these earnings in context?
I think that's a very good point. The context as well to the Standard Bank, you have a very seasoned chair that's been there 10 years, took the net profit from around 4 billion to 12 billion, created 16,000 jobs, increased the market cap considerably. We see Standard Bank in 16 African countries and about 14 others. So that payout relative to that 10-year period and what was done is very, very, very well earned. And we've always said it's not so much the quantum that is earned, but it's what you had to do to earn it. And it's the what you had to do to earn it part that is sometimes missing from some of the information.
Many are putting transparency in the spotlight. I mean, you mentioned
Yes.
King 3 and many calling for stricter transparency when it comes to the appointment of these executives in the first place, that these pay packages should be outlined from the word go.
You've hit the nail on the head. A lot of these payouts that seem like the person hasn't done anything is that the contract right in the beginning was if you're here for 5 years and you stay the 5 years and do ABC, then you'll get paid X million. And we have different views as to whether people perform. For example, at the moment there's the whole debate around board pay. If you get an exorbitant amount of money to attend board meetings, what have you done to perform? I don't think one should necessarily confuse how one sets the pay in the first place, regardless of person, relative to once you've got folk in there and they're doing the job and they may or may not perform, then of course it looks out of balance. And I don't think anyone's in favor of paying these huge fees and exorbitant bonuses for non-performance. But where there was performance, then it's very well earned.
So what should, having said all of that, what should companies be focusing their attention on? How do you get the ball rolling on this? Because it seems like it's a very fine balancing act that needs to be played here.
It's difficult because on the one hand you want to attract the right caliber of person, and on the other hand you may be spending public money or shareholder money and you don't want to be spending more than what's due to the person. So the answer, we think, is more transparency. And as long as folk know what was done to be earning it, and one agrees that in year one, when it comes to year 5 or 10 or 15, then one can't have much to say about it.
Well, there's a very big social issue as well. I mean, let's take a look at it from that perspective. What kind of gap are we looking at? I came across an interesting figure where Labour Research Services reported that it can take up to 330 years for a low-income worker to actually earn as much as a CEO of a large company in a year. And at what rate do you see that gap actually narrowing?
Yes. Unfortunately, the global trend is that that gap is not narrowing, it's getting bigger. If you describe it as a pay ratio or a wage gap in South Africa, it's approximately 1 in 70. So if I was a lowest paid worker earning 1,000 Rand per month, one could expect the highest paid worker to earn 70,000 Rand a month. I think we do need to do something about that, and the easiest way and the best way is to increase the productivity. Yeah. And pay the better salaries, higher productivity, higher salaries.
Well, industrial action certainly over the last couple of months has been getting louder. It's seen politically driven sentiment really emerging on the market scene. How do you see this impacting executive pay demands and offers moving forward, if at all?
Normally, if the trade unions are coming in at 10, 11, 12%, the executives want to come in at a similar amount. So the one fuels the other. Yeah. But with better governance, the inflation we think will be around 5.5%, 6%. We need to exercise restraint. We have to be responsible. And I think that the government are leading the way in this aspect and show some governance in that area. 5-6%.
With these shifts and changes taking place, I mean, you mentioned King 3 and that we're looking at shareholders approving at a general meeting, for example, pay packages moving forward. Do you see this driving away talent from listed companies more so towards private companies in the future?
We haven't seen that shift yet, but it is possible. One of the other things, just to throw in as context, is that when these big multinationals come into South Africa, they come in on the pretext that we are a free market economy. Yeah. So in a free market economy, one pays what one needs to pay. So I think that has also played a role in driving up the executive pay packages. And the other thing is benchmarking. When one benchmarks, it's self-fulfilling. So you just want to keep ahead and make sure that you're on the upper quartile, and maybe we need to exercise restraint there and say, let's keep the guaranteed package relative to what we're doing steady and leverage that variable pay. So if the company doesn't perform, then there is no bonus.